So hello learners, welcome to our session today. I'm your instructor, CPA Aringo Frederick. So it's a continuation of what we were doing earlier on. Remember in our previous class we were looking at integrated and non-integrated accounts. We looked at the main differences between integrated and non-integrated. We went ahead and looked at some of the unique features that probably we'll be looking at. And in our session today, after we had looked at the books of accounts that you are going to maintain in both financial and cost bookkeeping, in our class today, I want us to talk of the double entry system in integrated accounts. It's very key because that's a concept that will assist us to understand each and every item that you are going to tackle from now on when it comes to integrated accounts. So to start with, I want us to start with this concept, the double entry system in integrated account. Number one, we can start with number one form of double entry that we must always have at the back of our mind is to record materials, to record purchase of materials, to record purchase of materials, to record purchase of materials. So basically, as we are recording purchase of materials, always I must have the two books to be affected. I'll always be having two books to be affected, just like any other double entry. The same concept that will apply here. So in such a case, to record purchase of material, of course I'll be having two accounts to be affected. So we'll be looking at the account that you're going to debit and the account that you are going to do what? To credit. So I've purchased these materials, meaning that we have increased our stock in our company. And increasing the stock in our company, it means that we are going to debit our inventory account or a material account. So in this case, I'm going to debit, you are going to debit, that is a stores ledger. In this case, we are going to term it as stores control account, stores control account, or materials account, or raw materials account, or raw materials account. That's the account that you are going to debit. And where are we going to credit? In this case, what have I used to purchase this? Is it cash or we purchased on credit? So in this case, we're going to credit either bank in the event that I've purchased in cash, or we can then credit our creditors account. That is in the event that we've done what? We purchased raw materials. In the event that we purchased raw materials, I'm going to debit our stores control account and we are going to credit our bank or creditors. So, meaning that we are talking on this case, assuming this is our stores ledger control, assuming this is a stores control account, and this is our bank. So you're saying that this is bank or who? Creditors. This is bank or creditors. So looking at that concept, you're saying that in that event, I'm going to debit our stores ledger control, meaning that I've either purchased or I've taken on credit. So I'm going to debit our account there. And in our bank, I'm going to credit. So in this case, I'll be having the detail as what? As stores ledger control account or raw materials control account. The details of that. So that means that I've debited, I've indicated where that has come from, if it's either from bank or credit, and also in this case I've indicated where it has gone, the aspect of credit. That's what you're terming it as what? As double entry, in relation to that. So after we've looked at that part, that should take us to number two. That should take us to number two account. That should take us to number two. Number two, we'll be looking at to record materials returned to suppliers. Number two, to record materials returned to suppliers. To record material returned to suppliers. In this case, you want to record materials that we return to suppliers, meaning that what are the account to be affected? Of course, I'll be having part of our raw materials account, meaning that I'm reducing because I'm returning, meaning that I'm reducing the raw materials in our stores and returning them to who? To suppliers. So one of the accounts to be affected, of course, I'll be having what? The raw materials account, which in this event, if I'm reducing the raw materials, it means that we are crediting that account. So to record raw materials returned to suppliers, I should be having, I'm going to have this component. I'm going to debit. We are going to debit our creditors account. So allow me to use a black pen here. So we are going to debit. Where am I returning this? I'm returning that to our creditors account. We are returning that to our creditors account or suppliers. So this account to do what? To debit. Whereas I'm crediting which account? Which account are we reducing? We are reducing the raw materials account. So in this case, I'm going to credit stores control or raw materials account. Raw materials account. So the double entry concept, in that case, I've reduced our raw materials. That's why we are terming it as we are kind of crediting. It means that in such a case, I'd be having these two accounts. Initially, we had stores ledger, control account, or raw materials. And in this case, probably I'm having what? We do have our creditors. So that I want you to get this concept clearly. So assuming that in this case, at first, I'd purchased items from our creditors or suppliers, say worth 200,000. So in this case, stores control. Maybe I'd purchased items worth 2,000. Meaning that initially, I had debited our stores control account from our creditors worth goods worth 2,000. Now I'm returning these goods. Talk of return inwards, or rather talk of return outwards, because I'm returning them to suppliers. So if I'm returning them to suppliers, assuming we notice that goods worth say like 500 didn't satisfy us due to one or two reasons, so I'm going to return the goods. And in returning these goods, you are saying we are going to do what? We are going to credit, meaning that ninarudishia supplier creditor 500. And in this case, because initially this person, we are owing this person 2,000, but in this case, I'm returning goods worth 500, meaning that it's reducing our liability at this point. And also in this case, it has reduced our materials in store. So that as at the end of the day, talk of this case, I can have my balance carried down to be 1,500. And the amount owing to this individual, therefore, will be balance carried down of how much? 1,500. So this will be the amount owing to that person. So this is that concept of what? Of double entry in relation to record materials returned to suppliers. That is very key for us to note. So after we've noted that one, that should take us to number 3, bookkeeping or entry that we should always be having. Number 3, we are going to talk of what? To issue materials to production. To issue materials to production. So number 3, to issue materials to production. So looking at this case, to issue materials to production, what should we be having? In this case, I want to remove some items in our stores control or raw materials account to issue them to production, meaning that production could be either work in progress. So in such a case, we'll be having these accounts. Number 1, we are going to debit. Mark that clearly. We are going to debit work in progress account. We are going to debit work in progress account, and we are going to debit if I'm dealing with direct materials. In this case, you are looking at what? Direct materials. If it is direct materials, this is direct materials. I'm going to debit our work in progress. And also we can debit we can debit our production overheads account production OHDs account. The beauty part of this is that we had already looked at all these accounts that we'll be mentioning here. So I'm going to debit production overheads account if I'm dealing with what? Indirect materials. If I'm dealing with indirect materials. So in this case, I'm having what? Indirect materials. Indirect materials. So we debit production overheads account if I'm dealing with indirect, and work in progress if I'm dealing with what? Direct materials. A very key concept for you to note. So after we've done that, the account to credit, of course by now we should know the account to credit. Where are we getting these materials from? We are getting these materials from either stores control or raw materials account. So we'll be talking of stores control account. Stores control account. Stores control account. So mark that very well. To issue materials to production, we'll always be talking of either two, either direct or indirect materials, and I've explained how you can work it out. So that in this case, assuming that I'm issuing the materials to production, we are talking of work in progress. This is for direct materials, and you are talking of production overheads account. This is a form of an expense account. Production OHD account, production overhead account. So this is for indirect material. This is for indirect material. That is for indirect material. So you're saying that in this case, at any given point, I'm going to reduce the materials from stores. I'm going to reduce the materials from stores. And in reducing these materials from stores, it means that I'm going to increase work in progress account. So in this case, I'll be having stores control, recording the value there if it is direct. And also here you can have stores control. If it's indirect, I'll be having my figure there. So I've credited stores control account, meaning that we've reduced the stores control account and we have increased either production or work in progress account. Very key concept for us to note. After we are done with that, that should take us to number 4 entry. That should take us to number 4 entry. And number 4 entry, the one that we should always be having at the back of our mind is to record wages. That is number 4, to record wages. To record wages. Expense, of course, to record wages, expense account, to record wages, expense. So in this case, my good students, by now you should be very familiar with this. If you can remember the concept of double entry in your financial accounting concept, the same case will apply here, because to record the wages, wage is an expense account and all expenses are always debited. Whereas, where am I going to get this money to pay? In that case, I can either pay in cash or we can pay via, we can either pay cash or bank. Solving this case clearly, we can come and say the expense account, which is a wage account, meaning that we are going to debit our wages account. So debit your wages account, debit your wages account, debit your wages account. And account to credit will be what? The account to credit, again, always know where is this cash that I'm paying these employees is coming from. In this case, we can talk of what? We can talk of either talk of a bank, or if I'm carrying it forward, I'll be talking of wages payable. This is a liability account, wages payable account. So you can always have this concept. You can always have this concept whereby to record wages, meaning that wage is an expense account, right? And if it's an expense account, this is what I'll be expected to have. This is my wage account, wages account, right? And in this case, I'm having what? I'm having bank. Or we can have wages payable, wages payable. So looking at this double entry, my good student, is that at this point, wage is an expense account, and where is that cash coming from? Is coming from bank. So my detail here, I'll be having bank, yes. I record the amount there. Where have we reduced that? So if I've reduced via bank, in that case, of course, I'm going to have where? My wages. If pesa imetoka kwa bank, ikaenda wapi? Kwa wages account. So I'll be having my wages and amount there. In the event that probably it's a payable, meaning that if it's a payable, it will be a liability account. And if it's a liability account, of course, I'll be having here form of what? Wages payable. If it is a liability, I've carried it forward, meaning that I've not paid. It has remained to the company as a debt to the employees. Like this time, we'll find that I'll be having my wages payable in that case. And also, on the other case here, I should be having what? I'll just be having the same component, wages, because that is the account that we've done what? We've debited. So basically, that is very key for us to note. Now, another question will come in the event that you want to charge these wages to production. You want to charge now your wages to what? To production. If you want to charge your wages to production, what will you recall? In the event that you want to charge your wages to production, what should come at the back of your mind? So to charge wages to production, that should take us to double entry number what? Number 5. That should take us to double entry number 5. To charge wages to production. To charge wages to production. This is to charge wages. To charge wages to what? To production. To charge wages to production, what should we recall? To charge wages into production, always have that in mind, the concept of direct and indirect wages. So, meaning that at the back of our mind, work in progress will always click in. At any given point you are talking of, to charge into production, the aspect of work in progress account will always ring at the back of our mind. And also, if I'm dealing with the indirect, the production overheads should also ring at the back of your mind whenever you're talking of what? Charging to production. So to charge wages to production, these are the accounts that we'll be having. These are the accounts that we'll be having. These are the accounts that we'll be having. Number 1, talk of debit. I've already given you a clue. That's the beauty part of it. I've already given you a clue. So if it is direct wages, I know by now you should be able to know which account that you are going to debit. Work in progress account. Work in progress account. In the event that you are dealing with what? Direct wages. In the event that you are dealing with direct wages, I should be having it here. This is direct wages. This is direct wages. In the event that I'm dealing with direct wages. What if I'm dealing with indirect wages? If I'm dealing with indirect wages, meaning that the account to debit, I should be talking of what? Account to debit, I'll be talking of production overheads account, because that is what we noted as an expense account. So production OHDs account. In this case, if I'm dealing with, in this case you are dealing with indirect wages. In this case, we are dealing with indirect wages. So we have indirect here. Indirect wages. The question would be, where has it come from? The wages that I'm charging to production. Of course, it has come from our wages account. It has come from our wages account. So therefore, the account to credit, I should be talking of account to credit here. I'll always be talking of wages account. Wages account. I'll always be talking of our wages account. Meaning that always, whenever you're looking at that double entry, whenever you're looking at this double entry, so I'm having the 3 accounts here. We have the 3 accounts. So talk of the 3 accounts being, number 1, talk of our work in progress account. Talk of our aspect of production overheads account. Talk of our wages account. So that we are saying that in the event that you are charging this item to production, initially I'd recorded a figure here, maybe from bank or from the aspect of payable, wages payable. So recording this case, what you are saying that if I'm charging to production, I'm going to debit work in progress account. So in this case, the detail here of the wages, it will be on a credit. I'll be having it at that point. I'm reducing that wage account because I'm charging it to production. And here I should be having what? Wages account. You see the details here? Wages account. I'll be having it at that point. Whereas if it is indirect, I'll be having what? Production overheads account, meaning that at this point I should be talking of what? Of wages account if it is in regard to indirect wages. So these are the double entry that we are talking about. So we are aspect of crediting our wage account, and in this case for direct we've said I'm going to debit our work in progress account, and we are also going to debit our production overheads account. You are going to debit our production overheads account. That is what this entry is telling us, which you should always be very familiar with, because it is always very key for us to understand that concept. So after we are done with that, that should take us to entry number 6. Remember, the entry that I'm giving you here is a summary of all what we'll be having in any problem relating with integrated accounts. So talk of number 6 entry. Talk of our number 6 entry. Number 6 entry will be what? To record manufacturing expenses. To record manufacturing expenses. To record manufacturing. To record manufacturing expenses. To record manufacturing expenses. By now, whenever we've seen this, I know most of us, the books or the accounts to be debited and credited should click at the back of our mind. So to record manufacturing expenses, which accounts are we going to consider? To record manufacturing expenses, these are the accounts to consider. Number 1, as at the end of the day, I know I should be having production, because I had mentioned in regard to production overheads account as part of our expenses account. So I'm going to debit our production OHDs account. I'm going to debit our production overheads account. The question will be, hii pesa ninalipa inatoka wapi? So of course I'm reducing my bank account. These are expenses, so I'm reducing my bank account. So you're talking of debiting production overheads account and debiting our bank account, or crediting our bank account, or we can talk of expenses account. We can talk of expenses account. So that's what you'll be having. In the event that you are recording manufacturing expenses. Key element to understand is that at least I must be having what? Production overheads account. And also at the back of my mind, I know very well I'll be talking of what? The bank account, where this cash is coming from, or where that expense is coming from, so that we put it under production expense or overheads account. So after we've talked of that, that should take us to entry number what? Number 7. That should take us to entry number 7. Very key to understand. So entry number 7, that should take us to number 7. Now we want to charge this production, or rather we want to charge overheads production account. So to charge overheads to production, to charge OHDs to production, to charge overheads to production, to charge overheads to production. To charge overheads to production, the same concept that we had noted earlier on should also click at the back of our mind. So the moment I'm seeing charging to production, of course, the concept of work in progress should always ring at the back of our mind. So always, whenever we are charging to production, the component to debit, it will always be a component of either, if it is direct work in progress, indirect, the aspect of what? Production overheads. But in this case, you want to charge now our overheads to production. So therefore, I should be having, we debit, of course, this is work in progress account. And credit what? We are going to credit our production overheads account. Of course, I'll be crediting our production OHDs account. I'll be crediting our production overheads account. I'll be crediting our production overheads account. Very key concept for us to grasp it. So these 7 entries, just up to that point, 7 entries will give us a key understanding on what will be required to do whenever I'll be dealing with what? With these accounts. Whenever I'll be dealing with these accounts. So, also maybe a key element to note, the last three accounts we are talking of cost of goods produced. You can also talk of the aspect of sales and all that. But basically, these 7 are the main components that we must always have at the back of our mind. So looking at that case, maybe just looking at them, we can talk of the last accounts to consider. I've mentioned the 7 are the main, but also these elements that we're going to look at are also very important. Of course, we'll be talking of what? We'll be talking of to record cost of goods produced. To record, this is number 8. To record cost of goods produced. So to record cost of goods produced, what will we be having? So to record cost of goods produced, we just have it right now. To record our cost of goods produced. Number 1, I'll always be talking of what? I'll always be talking of finished goods account and work in progress account. Just a moment. And work in progress account. So always remember, suppose you have any question, you can always ask on the ask question button just below there. Just below the subtopic, we have ask question button. You can always ask your question at that point, and we'll be there to guide and assist you accordingly. We'll always be there to guide and assist you accordingly. So we are saying the other point is to record cost of goods produced. So just a moment. Record cost of goods produced. I think that light is good. So we are talking of to record cost of goods produced. This is what we are having here. To record cost of goods produced. To record cost of goods. To record cost of goods produced. Cost of goods produced. So to record cost of goods produced, that will be simple, because what we'll be doing, I'm going to focus on these 2 main accounts. Number 1 account to focus on should be, we are going to debit our finished goods account. And of course, we are going to credit our work in progress account. We credit our work in progress. Account. Those are the 2 main accounts that you must always consider. So after we've done that, meaning that you know, like in this case, to record cost of goods produced, now I'm kind of removing them from our work in progress, our production account, taking them to our cost of goods. That's why we're timing it as what? As finished goods account. Then the other account to consider at this point, we'll be talking of to record cost of goods sold. Number 9, to record cost of goods sold. So to record cost of goods sold, in this case, it will be very easy for us to get it, because if you have the knowledge of financial accounting, right now it should be very easy for you. Whenever you're talking about record cost of goods sold, of course, I know I'll be having these 2 accounts. I'll be having the aspect of cost of sales account. So we are going to debit our cost of sales account. So talk of our cost of sales account, and we are going to credit which account? We are going to credit our finished goods, because I'm transferring them from the finished goods. So talk of finished goods account. So I'll be having the two accounts. We debit cost of goods, cost of sales account, then you credit what? Our finished goods. Then the last element to consider will be to record sales. To record sales. In fact, I should leave this as your assignment. To record sales. So looking at recording of sales, meaning that now I'm doing what? I'm disposing these assets, or rather I'm disposing the finished goods that we had. So at this point, confidently, I can have what? I'm going to debit. Of course, at this point, money is coming in. Pesa inaingia. So I'm going to debit our bank. Or in the event that I've disposed, or in the event that we sold these goods on credit, we'll be talking of what? Debtors account. We'll be talking of debtors account. And account to credit will be what? I know by now we should be very good at that. So the last account to credit, I'll be talking of what? Sales account. Because it's a revenue account this time round, I'll be talking of, we are going to credit our sales account. We are going to credit our sales account. So after we've looked at all this double entry, they are very key because they are going to guide us from now on. At any given point, in the event that I've seen a question of integrated accounts and I'm very good in this double entry, nothing should worry you, because what we'll be doing, we'll just be taking, just as long as I've gotten the concept of double entry correct, I just open our accounts and effect our accounts accordingly with the double entry that we just studied today. So in the next session, I want us to handle an illustration question. This illustration question will give us a wider understanding when it comes to integrated accounts. Having these books to the point that I'm going to prepare our profit and loss account, and finally we can also prepare our statement of financial position. So to this juncture, kindly I want you to meet me in the next session where we are going to handle the question, full question in relation to what? Integrated accounts. Thank you so much, and let us meet in the next session.